Today I'm here to talk about the personal portfolio funds at Coutts that are available on Coutts Invest. We have 5 funds, Personal Portfolio Fund 1 to Personal Portfolio Fund 5. As you might imagine, Personal Portfolio Fund 1 is the lowest risk, up to Personal Portfolio Fund 5 the highest risk. They invest in a blended way of cash, bonds and equities and offer a really simple, cost-efficient way of getting access to the financial markets. We've just come to the 1-year anniversary of the personal portfolio funds. They perform very strongly, I'm pleased to say. That's all risk levels from Personal Portfolio 1, which is our low risk mandate, to Personal Portfolio 5, essentially all equity, higher risk mandates. It's been a challenging year. Look at all the political events we've had. Of course, Brexit, which we know about, but also the US elections, and there's been a very important French election during this period. So how have they performed? Well, diversification, one of our key investment principles, have worked really well. So, for example, over Brexit, we did see the pound fall sharply. What does that mean? Well, being diversified and international, it meant there was some gains in the portfolio from being outside of sterling, as those overseas assets provided gains in sterling terms. So key to be diversified on these portfolios. So what is the outlook for the next 12 months and of course further ahead? One of our investment principles is to be very long term. Why? That's the best way of earning risk premium, put simply returns on equities, return on bonds over the long term. What do we see in terms of constructing the portfolio? So we're emphasizing at the moment equities, and within equity markets, not so much US equities anymore, but European, Japanese and emerging market equities. Why? One of our investment principles is value. These are amongst the cheapest markets in the world, whereas US markets have become somewhat more pricey. Turning to bonds, very important for our lower risk mandates. We're de-emphasizing gilts or government bonds. They're on the expensive side, and we do see the prospect of eventually UK rates going up. So we're emphasizing more corporate bonds, bonds issued by corporations, which are both high quality, what's so-called investment grade, and also higher yielding bonds, typically issued by lower quality companies that do well when the economy is resilient. So to sum up, moderately positive on the world economy and the equity markets, and generally positioned for strong returns over the next couple of years. Each fund is priced daily, available for buying and selling on a daily basis. We monitor the funds every single day, and of course the investment strategy is subject to change. For more information, go on coutts.com.